Stock which has performed extremely well in automobile companies is nothing but Tata Motors. And we are going to talk about Tata Motors in detail because this is one stock which many of the investors, retail investors are holding, and they want to know what is going to happen with Tata Motors because already run up a lot. Now, from you can say from 2020, it was around 170 odd something. Now it is almost about 900 rupees. So this question has been asked by Mitra Jain and Rohan Gupta and Yashashwi. Yes, so all these three people have asked for this. No, what is the review of Tata Motors and where it will go? So let us talk that stock in detail. And guys, if you want your stock to be analyzed, put it in the chat box. I'll take it next time. So guys, let us talk about Tata Motors. In talking about Tata Motors, let me just share the screen how it has performed in last few years and at least especially this year. So if you see Tata Motors, guys, see in this year also, if you see, it has performed very well. From if you talk about now March around February, it was around 400. It has gone to almost 936, almost more than double. It is outperformed all the automobiles company, whether you take Maruti, M&M, they must have gone by 30-40%, but this stock has almost double, more than double. Extremely, good run in this year. Even if you take 5 year angle also, no guys, as I told you in 2020, it was around April 20, it was around 65. Okay, then it has almost gone to almost 1000. It's one type of multi-bagger stock in last 4 years. And now no one has expected that Tata Motor will run so much. And there are multiple reasons why Tata Motors has run up so lot. And today we are going to talk that in detail. First, let us talk about the company, why it has gone up so much. So talking about the company, guys, let us talk about the market share and everything. So if you see here, the product wise breakup, if you see here, then the vehicle Jaguar and Land Rover is the main product. Almost a decade ago, when Ratan Tata bought Jaguar Land Rover, it was a loss-making company. Everyone was thinking, why is buying that company? But that was a vision of Tata Group, and you can see now it is paying off. You can say 60-70% of the series of Jaguar Land Rover, and guys, that is one of the premium product and it's doing extremely well China and across the world. Then passenger vehicle is around 11.7 and commercial vehicle is around 18.2. Vehicle finance is 0.9% only. Again, location wise, if you see 33% is coming from India. Rest of this is coming from China, USA, rest of Europe, UK, and others region. Guys, as I told you, Jaguar Land Rover is having a global business, and that is why this is a company where you cannot tell it's just a domestic company. It's a global company, and that is why to predict sales and all that, to also understand the stock, it becomes multiple difficult for you because you have to take into lot of account, like the dollar currency, the foreign exchange. Also you have to understand how it is performing across the world, again which are the country doing well, the sales where it is doing well or not. So it is little bit difficult to understand. Of course the balance sheet is quite complicated, but yes, this is how the product wise and location wise segment is there. Again, if you talk about operating profit breakup, the major profitability they are getting from Jaguar and Land Rover, almost 77%. So that's why analysts always keep an eye how the Jaguar and Land Rover performance is there, because if this segment is going to hit, it will hit the profitability directly. And that's why if the China is going down, this company is not doing well. But you understand the scope is very big. Scope is very, because when you are concentrated only in India, you have to depend on Indian consumer and all that. But when you are globally, if global economy does well, Tata Motors will do well, and the sky is the limit. Automobiles, the electric vehicle like Tesla and all that, where they reach. So now as Tata Motors is focusing on electric vehicle, the sky is the limit. So that is what we have to always keep in mind. Similarly, guys, so Jaguar Land 77%, passenger vehicle is 3.1, and commercial vehicle is almost 19.7%. Again, if you see the asset-wise breakup, 71% is coming from UK, that is Jaguar and Land Rover. Then rest of Europe is 5.4%. India is only 20.3%, and others are 2. person. That's why Tata Motors will always, you have, whenever you guys reviewing, you always have to think as a global company, not as a Indian company, because as you can see now, almost 75, more than 75% asset and profit, everything coming from outside. Now let us talk about the market share. So if you talk about commercial vehicle market share, guys, it is almost 35%. Now this is a big market, and you know that in commercial, Maruti is having the highest share. You can say more than 40 to 50% there. That they have a quite a good share. Sorry, in the passenger vehicle, but yes, commercial vehicle. The Tata Motors is around 35%. Even electric bus market share is around 25.6%. AshokLeyland is also giving a good competition, but yes, electric vehicle, Tata Motor is one of the pioneer. And if you talk about in India, who is ahead in electric vehicle, I think Tata Motor is the leading company, because the technology and the way they've set up everything, no, it's actually helping them a lot. Similarly, electric vehicle, when you talk about four wheelers, the market share is 68.61%. And that is where no Maruti is behind. As I told you, the Maruti share is about more than 50%. But when it comes to electric vehicle, this is where the Tata Motor is making a killing. And this is where no it is leading. Now, what changes in last 3 years and 4 years has happened for Tata Motors now? Their focus on electric vehicle, and they were one of the first company which has gone big way in electric vehicle, and this is what is paying currently. Maruti is somewhat laggard. M&M is also doing well. They are also focusing a lot of in the electric vehicle. They are also doing good. But when it comes to pioneer, yes, Tata Motor is leading again in 49% in light commercial vehicle cargo, and that is what Tata Motors. So these are some of the segment and the market share. Okay, now let us talk about the overall the management highlights. But before I go to the management highlights, I just wanted to show you the how is the quarterly results and everything. So if you talk about the quarterly result, now this is very interesting. If you see here, the company was making a loss till September 2022. You can see even though their revenue was 79,000 crore, the loss was around 898 crore. Of course, China was playing a big role there. And however, if you see here, after that, their revenue has gone steadily up. Not so, ऐसा नहीं है कि बहुत ज़्यादा से ऊपर जा रहा है, but yes, it is slowly and gradually going up. Okay, the growth is around 35%, 42, 32, 24% or year-on-year sales. I'm talking about year-on-year sales. And however, overall the profitability, if you see here, the it has jumped from 3,000 crore rupees to almost 7,000 crore rupees by December. December 23 is one of the, you can say, most profitable quarter in Tata Motor history. You can see they never earned so much money. So 7,000 crore rupees, that was a big jump. And you can see that's why you can see the jump in the EPS from 8.91 to almost it has gone to 21. So that is a big jump happening. And that is why you can see the Tata Motor touching new highs, because the jump, and of course electric vehicle and all that, no, they have got a big way and they are getting the benefit of it. Again, Jaguar Land Rover is doing extremely well across the world, as it is a premium segment, so profit margin is always good. Now let us compare with the peers company. Now if you talk about with the peers company, the industry P is around 27.94. Tata Motor is around 17.48, which is on a lower side. Ashok Leyland is 21. Okay, so now here, no, it is considered as a LCV and HCV. Okay, in that way it is being checked. RO is 5.6, 5.95, which is on a lower side. Okay, and if you see the growth rate, if you see here, that is the sales growth is around 33% and profit growth is around 31% in last few years, which is very good, which is very good. So this is why the company is doing well, and as it was a loss making, now it is generating a good amount of profit in last 1 year, and that is what is re-rating is coming at a Tata Motor level. Now let us understand about the management commentary. Talking about management commentary, guys, because this you have to understand. Management plays a big role, guys. Understand that. Unless the management is not aligned with the growth, management does not think the company is going. it is not going to grow. Okay, so let us understand what the management is saying. So management is saying about JLR demand. They are saying they're not seeing any demand issue in the US, while Europe is relatively stable. Management not seeing any change on EV penetration. So EV is going to go in a big way in next 5 to 10 years. You will see major vehicles will be substituted to the electric vehicles, and that is why no where the Tata Motors is leading the game, and they will be much more no get taking most of the market share if everything goes right. Again, commercial vehicle outlook, fleet utilization continues to be a healthy level. Transporters profit remains stable. Again, there is a drop in government spending because the election is going to come. However, no, they are considering that quarter 4 will be a single digit growth. Single digit growth hoga, so little bit drop at a growth level. At again, passenger vehicle outlook, guys. If you say passenger vehicles challenging and industry may grow less than 5% year on year. So they are thinking the yes, passenger vehicle में थोड़ा growth कम होगा, but it is not said it will be zero, but less than 5%. Again, next leg of growth will be driven by JLR. They expect the EBITDA margin to reach 9.9% by financial 26 in line with management guidance. As I told you, Jaguar and Land Rover is the trump card of Tata Motors. And if they are thinking that yes, EBIT margin will reach 9.9%, then I think this is a big plus point for Tata Motors. Again, while the India, China, CV and PV business look moderation, the shift on margin constant and earning growth, which is likely to sustain. So, thoda growth come hoga, maybe in 1 or 2 quarter, but things will be much better afterwards. Also, if you talk about other issues, so other highlights, it can they are thinking that they think that operating cash flow will be there and the debt will be less than 1 billion pound by end of 2024. But however, they are anticipating there will be a net cash by 2025. So initially there is a good capex, but after 1 or 2 years they are being having a good cash flow, and that is what they are predicting here. Again, while the India CP we see some moderation in the growth in 20-year 5 PE. Red Sea crisis, you know that Red Sea crisis is going on, and as a result, 15% of sales in China goes to Red Sea crisis. This will have an impact on their supply chain while they are sending it to China. But yes, many of the major plants of Tata Motors is there in the UK also. So when they are transporting to China, because the Red Sea crisis is there, that will have an impact. When EBIT margin is guidance is 10% by financial 26, which is quite good. Which is good. If they are able to achieve this guidance also, that is a big positive for the company. Now, let us talk about the outlook. So, volume. So, again, the outlook will be the volume growth in JLR will be driven by execution of order book, improvement in supply chain. Now the semiconductor chip and all that is quite available. Demand recovery will be there. So, JLR will be the leading factor through which Tata Motors is going to achieve their goals and their guidance. Again, profitability is going to improve for JLR led by mix, forex, and operating leverage. So they are working on that JLR operating margin. Again, overall, want to achieve an EBIT of almost 10%. Again, Indian CEP on the path of profitability, but slowly and gradually. It is not going to be having on the day one. Of course, maybe in next 1 or 2 years, things will be much more stable. Again, focus on leveraging EV disruption to its advantage for the passenger vehicle segment. So basically, they are focusing on electric vehicle in a big way. They want to be a pioneer in electric vehicles, and that is what is going to lead Tata Motors next growth. So two things. One is the JLR penetration, JLR, how they are able to perform. Again, how much the EV margin will be there, maybe around 10% from here. And another is the electrical penetration. If in the passenger vehicle they want to make a killing by doing a electric vehicle penetration. So now when we talk about the various ratios and all that, you can see here the EPS to this year may end at around 52.9, which is quite good. Okay, EPS growth. So earlier it was used to be negative, but in last year it was 2.2. Now it is 52.9. Last year only they first time made the profitability after a long time. not first time, but after a long time they made a profitably. Again, EPS growth is extraordinary this year, and next year will be also good. If you talk about dividend, payout will be around 2 to 3%. Now, when we talk about P ratio is still around 17, which is on a lower side compared to other other manufacturing companies. If you talk about, so it is reasonable. It's not too high. Okay, EV by EBITDA is almost 6.1, which is also good. EV by sales is almost zero point 0.8. Price to book value is 5.3, so not so high, but overall it is quite okay. So ऐसा भी नहीं बोल सकते बहुत महंगा स्टॉक है. ROE, which was almost negative till last year, now it has gone to almost positive. Now it is almost 37 and ROC is around 15. So you can see ROE and ROC, both the places where they are done very well. And now as the profitability going up, these ratios are going to improve. Now, what about the future? So if you take around a 15% now, because at the end we want to invest, we just spoken about the present. What is the future? The future is quite good. If we talk about 15% growth here from here, the EPS may grow 15% at revenue growth. EPS may grow by modest 20%. And if they are able to concentrate on EV penetration much more, and also if you talk about the JLR penetration across the world, I think things will be much, much better from here. So even at a current valuation, the road looks much more better from here. And if you say whether the Tata Motors is in a big highway where everything looks clear and nice and clear and all the signals are green, it looks like, I think Tata Motors in a good shape and they want to go faster, and I think they may achieve faster because the way they brought the technology and all that. Never think that just because the stock has gone up so much, it may not go up from here. You just think about Tesla and all that, where they have reached. They've reached at such a big market capitalization level. So Tata Motors is nowhere. So I'm not saying that Tata Motors is the next Tesla and all that, but things are that from here also there is a look. It looks much better, and no growth may be there in coming future. So guys, this is what my take is. If you are holding Tata Motors, please keep it on hold. Means hold यानी बेचना नहीं है. I think things will be better. Even if at every dip, you should think of buying also if you want. And looks that road are much more clear for Tata Motors. So hope you like this video, guys. If you like this video, do like this video and do share it to your friends and relatives, and also put in the comment box if you want to review any stock or sector. I will review in the next few videos. And also, guys, if you want to learn how to review your stock, how to review a sector the way I'm doing currently here, the link is given below. You can attend our masterclass. The costing is more than 1500 rupees. I'm giving you completely free. During the week, we are having this type of session. So it will be a much, much valuable session for you also. So attend that session and stay tuned. And I'll be seeing you in the next year. Okay, then. Bye bye.